The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Friday, the 26th of June, almost wrapped up June. Wow, 5 months. God, no, it's six months. Unbelievable. All right, so we're looking at the Dow up 84 at 17,974. We were expecting some kind of reflex action. It's a little bit stronger than I expected, but a reflex action, actually, I had two points of view. One was because there was on CNBC just the other day, that was on Wednesday, there was Robert Schiller, Carl Icahn, and I can't remember the third person I'm not that familiar with, were interviewed, and they were all talking about being negative on the market. I'm saying to myself, hey, wait a minute. I've got to respect the guy who's taken a couple of $100 million and turned them into a couple of billion. That's Carl Icahn. But at the same time, he has been bearish in the market for quite a while. He's a genius at stocks. But market-wise, I remember him 6 months ago even talking about, or 3 months ago, 6 months, 3 months. He's been talking about the market being rather overbought. So, but it was picked up everywhere because we had quite a sharp session down. And he had just sold Netflix, and Netflix has made a particular peak with a round number low the other day. So it made a high of 706, was it? Yeah, 706.24 on the 24th. The very next day, it gaps down and has a 672 high. Make it real simple. If it closes 2 days out of 3 above 672, it could start to fill the gap and go into the bar, into that candle of the 24th. But as it stands right now, 120-minute chart has made a peak E top in a pattern that it says that the rectangle low, which would be 641.61, will be the real test. A close under that says, you know what, Netflix might be a great stock, but for now at least, the weekly chart could be making a peak E, and you could be looking at a G/B in the monthly. You don't even have to talk about the monthly because obviously the nearer term charts are going to be more important than the monthly at this particular point, but the monthly is acting very well. Now, so that reminds me of two things. One is when I say, I'm not that interested in the monthly chart. I got an email from someone once saying, well, what do you mean, a monthly chart? Of course I'm interested in the monthly chart. What I was saying, to be very clear, is that the monthly chart technicals are still very good. The month hasn't even been, it isn't even close to being finished. Anything can happen in a week. And therefore, I have to wait for the end of the month. That's what I'm saying. And at this particular time, the monthly chart is good. Just wanted to make that clear. Usually I don't get abrasive comments like that. I did get another comment. I'm going to deal with that right now. Other comment I just saw moments ago. Let's see. Don said, the heading of the email is, so you think all political discussion has the goal of changing minds? I never thought of it that way. But in actual fact, yeah, most of the time, people talk about it because they're trying to either make a point, not necessarily change minds, either to show that we're compatriots, we agree, or to try to convince someone that they're totally wrong. So yeah, I think there's always a point to be made when people are talking politics. After all, politics is ephemeral. If you're looking at politics, if Hillary Clinton was anyone else and did not have the whole cachet of that Clinton comeback aura, any medium that would be reporting on her would be just reporting about all the negatives. There are very few positives, but that's not the point. The point is she's pretty much the only candidate in the Democrat Party. I mean, who's ever heard of that? It's such a ridiculous thing. We've got over 300 million people in the United States, and you've got one person who's representing the Democrat Party. And this is not a political statement, this is a factual statement. I mean, what's with that? There's a whole thing going on with that. And if you look at it very critically, because today is Critical Friday, we can look at things critically. What you'd be looking at, and you'd be saying, something's wrong with this picture. There are scandals going on that are being pretty much ignored. What's happening? All right. And then on the other side, this is hilarious. You've got this entire field of runners, and they are all coming on quite strong as they open up their opening statements, and they're all vying with one another. They're not vying with the other party. They're vying with one another. That's the way it works in politics. All right, let's get back to the question. I didn't even read it now. Let me see. So, Don, here we go. So the heading is, so you think all political discussion has the goal of, what did it say? Of changing minds. All right, then he says, you said you don't talk politics because no one changes their minds. Well, actually, I don't talk politics to change minds. That's really what I wanted to say. I hope I didn't. You have to talk politics. That's, life is politics. Actually, life is timing. When I was asked, how come you went from music to the stock market? Well, what's the commonality there? Well, there are a lot of commonalities, but the most important one is timing. All right, so we're going to go to the question. You said you don't talk politics because no one changes their minds. Really, Basil? Is that the only reason you can see to a political discussion? What a pity if so. Having said that, I love your audio presentation. Oh, good, I got a pat in the smack on the nose, pat on the back. Presentations, otherwise, I've been listening to you since you started with Tom. I can't really afford your service, but I have learned so much from you. Thank you. Yeah, I do appreciate it. I'm just joking. I think it's really important that here at TFNN, Tom O'Brien, who pretty much started from scratch TFNN, has allowed everyone just free rein to discuss things as they wish. He has confidence, I think, in all his hosts that they will do their very, very best, and we certainly all do our very best. And I only refrain from politics in that I've seen the den. I've seen many things written and discussed for at least 10 or 11 years, just right here at TFNN, over there, since 2002, started my newsletter in 2003, 12 years. So I've seen that very few times has anyone in the den changed from being a Republican to a Democrat or a Democrat to a Republican. That is, I've not seen their thinking change at all. It just doesn't happen. So maybe it happens once or twice, but in the context of, and people are nice, I used to think Republicans, Democrats, and then I started thinking, you know what? Here in Newton, which is a very liberal city, I know a lot of extremely liberal people, and I know Republicans can slam them as much as they want. They are generous to a fault. I mean, they're nice, they're generous. I know Republicans, racist. They are generous to a fault. They are the nicest people. People are people. So I wanted to get that out the way, and I wanted to say, so I can't really afford your service, but I've learned so much from you. Thank you. So yeah, I appreciate that, and I hope you take the context of what I'm saying. What I was talking about politically was that I read an interesting thing that just said that people, that from the time you're born, there is enough evidence to say that people grow up not to necessarily change what they were when they were very young. And the political implication was that if you were conservative, this doesn't mean Republican, could be a conservative Democrat. A conservative, you pretty much remain conservative. And if you were kind of liberal and you had a lot of liberal leaning, you kind of remained that way. I thought that was very interesting. That kind of reflected. That's the reason why I brought that up. Now, let's just get out of this because we will not change the politics of politics. And let me just quickly run the numbers. The Dow is up 104 at 17,994. The S&P is up 80 cents at, S&P is up 3.5 at 2106. I was going to say, what a divergence. But it is a divergence. The Dow 30 is much stronger than the 500. The comp index is down 13. Now, this is going to be interesting. I'm going to show you some charts in a moment. Look at Netflix right here. Netflix pulling back. And we'll go through the charts. We'll go to some questions in a moment. And I've got gold down 40 cents at 11.71, silver down 7 cents at 15.73. Platinum's down 6 at 10.76. High-grade copper is up a little bit at 2.62. It's kind of stuck in that range. Crude oil is down 82 cents at 58.88. Bonds are down $1.50. Now, this is going to be interesting. What did I say? 114.80 cents was the 200-period exponential moving average in the weekly chart. Will we touch it? We'll talk about that in a moment. And the dollar is at 95.80. Let me just show the dollar chart right here. The dollar at this particular point is at 95.37. I've got up 19 cents, holding very well that very strong trend line I drew in. You remember that diagonal dash trend line? I'll make it a little bit smaller now so that you can see it. If you're looking, this is the chart on the left, the weight. I'm put it right there. It is. So you see how it's broken out, but it hasn't broken up. There's just nothing's going to happen until the dollar clears 95.80 to 96.20, and it should do that in the next 2-3 sessions. Otherwise, it's just stuck in the range as well. I am going to go, Mike in the Den says, Basil, Miami world tallest high-rise story. Oh, fantastic. Good, we're getting there. Miami announced plans for the world's tallest high-rise. Oh, man, I tell you, it's just happening. Everything's falling into place. I think I'm going to be giving another one of my, for my subscribers, another webinar, a follow-up, because we've had a sideways trading range essentially for 6-7 months, even 8 months. And I want to talk about the next phase. And that next phase, I'm not going to be able to do anything for the next week or two. But in July, I'm going to take time to start that whole chapter on the next phase. Hey, let's go to Ben in Tallahassee, Florida. Ben, how are you?
Very good, Basil. How are you?
Well, thank you. You can tell I was on a roll there for a moment.
Yeah. Well, let's leave it up to the QQQ to break away from the political talk.
Yeah, right. Yeah. Okay. So,
right.
Do you want to look at the QQQ?
Correct. So, what I'd like to do is I'm considering putting a fresh short on maybe even today. And I guess you look at this Greece situation, and I guess as a trader. There's probably nothing more frustrating than having to think about a news-related item that could impact your trade. So it kind of goes back to your continual comment about don't let news items screw up the overall flow of the market. Is that accurate? I mean, what are your...
Yes. Let me talk exactly to that point as soon as we get back. In the meantime, I've got the QQQ in 4 time frames right up here, and we will talk about it. We'll come back, folks, with Ben in Tallahassee and Don in D.C. straight off.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in 1 index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman. The Dow's at 96. S&P's only up 3. A divergence there, but one that you can understand because the Dow had been the weaker of the indices, and now it's the strongest on the day, and it's a kind of a rebound. Most importantly, what I'm looking at, and we are in the Chapman Wave methodology, we are in a sell mode in the daily S&P and the and the Dow. The Qs would have to close somewhere around here or a little lower, and then it would go from a sell signal to under 80%. Yep, to no, I'd have to have the MACD cross negative, close to a sell mode, but just a sell signal at this particular point. We got Ben Tallahassee who wants to. Do you want to add to a short position, or is this going to be it?
No, this would be a fresh new one.
Okay, then if it's a fresh new one, there's a, the way that I've been dealing with the signals that I've had over the last week, I feel kind of comfortable only in the sense that I haven't gone fully short, but what I've done is I've shorted in different sectors. And so far, thank goodness, today, all the sectors that we're short are actually pulling back. One in particular is pulling back very sharply. Actually, 2 are pulling back quite sharply. But most importantly, as far as the key indices that are concerned, based on the Dow, the S&P, and the QQQ series, even the IWM, I would prefer to get a convincing signal in my weekly charts to say, now you can start to add to the position on the short side. We got numbers, so I'm not sure adding is the right word, but let's say that one is not fully in the position that you'd like to be, but you are looking at the downside. So when I'm looking at the cues at this particular point, it's a weak session today, down 29 cents. The 120-minute chart has made a peak G top and has 109.18 as the 200-period moving average support. I think it's going to hit that. Now, the question that you had was that when there is a surfeit of news, but there is no kind of timeline for it, and you actually don't know whether the news is going to turn out to be a positive or a negative, what do? So what I've done is I've said, I've looked at the charts. I'm comfortable with the positions that we have based on the charts. If in fact there is a nudge, a push, because there is an interpretation of, say, the ruling for the Greek debacle, and or there's a series of recommendations, whatever it is, and they turn out to have a deleterious effect on the market, that's just going to be the cover story that I talk about, that you have to have a dark cloud cover to have a bear phase. Because as long as the sun keeps shining, it's like a cork in water, this market's going to try to rally. And your biggest fear right now is that you're going to go short. And now suddenly there's a news event that could, in fact, have a very sharp move to the upside. You never know, right? And that's what you're a little afraid of. So my suggestion here is try to muddle through. No, let them muddle through. That's what I meant to say. Over the next few days. What you could do is start a smaller position than you normally would have. I mean, doesn't that make sense? So you've got less risk, but you've got the reward if you're right. But I would like you to have the reward if you're right, because by next week, Wednesday or Thursday, if the Qs are starting to break 109 support and then 108.60, all of a sudden you can say, now I think I can add a little bit more, still put in stops. And I'd add to my position. Why? Because there's a chance that the weekly charts are starting to give the signals that are missing right now, that say we have gone to a sell mode in the weekly charts. And the sell mode by implication is just a designation of what, just like people today say, the transports are in a correction, they're in a correction because they've gone they've gone over 20% down. It's just a terminology. That doesn't mean to say that the very next day it can't turn up and go back up again. But I'm just saying, start small. You could even start today, even if there's a whole Sunday night and you can't do anything about it because you have to wait until Monday morning if you are thinking of shorting. Or you could just say, you know what? If Monday morning we're down 17 points in the futures, I could still start a position in the QQQs. Because if it does hold and doesn't have those rebounds that we so often see, then you're in the right position. And if it's wrong, because it would be a small position, you just have to bear with it and say, okay, I'm not right, and I'm going to take a loss on the small position that I have. So I think that the way to do it is to start a small position, and if we start to get a down mode, 109, 108, 107 is nothing in the Qs, because they'll be going down to test the trend line by within a week or two of 106 to 105. And then when we're getting to that area, even if there's a rebound, all of a sudden the monthly kicks in, and there's a chance that we could continue for quite a few weeks into maybe 6 weeks of a downward move, something like that. So you'll have time. So my recommendation here is, the news is something we can't deal with.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. Sorry about that because my hands were waving around. I hit the cord that was connected to the microphone, so I didn't get the music. I do have a clock, but I didn't look at the clock because I always rely on the music. All right, so I don't know if Ben is still here, but Ben, so my idea here.
Basil, are you there?
Yes. So I'm going to recommend.
I just had two quick comments. So, and maybe a question here. So do you feel Greece could truly change the trend? I want to get that out of the way.
I cannot imagine that Greece would change the trend, but I am concerned, as I said in my overview and my market call this morning. Let me see, where did I put that? Not there, but here. What I said
my thinking is, even if it's positive, use that as another place to add a second short.
You know, so what I said right here in my overview, and you can see it here in the chart. Here's the 120-minute chart. So we're having a pop-up that was this morning. There's the trend line support. Here's the trend line resistance that the VIX index hit exactly, the 120-minute chart, that Chapman wave diagonal wedge resistance line, target resistance line. You can see that you're making an arch in the daily, you're making an arch in the S&P, and you're making an arch in the daily Dow. The trend index hasn't really been on a tear at all. It's just kind of quiet. So I don't think the trend has changed because the Dow refused to go to a new all-time high in that last move up. So my thinking here is it's going to just be some noise. And what I'd mentioned right here is that when you get, I didn't call them gurus, I changed that, and I called when you get three, and I didn't finish my talking about Icon and Schiller. Schiller's been a bear forever. He's been a bear talk about real estate. You know, he's got this great index, but in fact, he's always bearish on real estate. He's always bearish on the market. Periodically he goes bullish, but majority of the time he's talking about it's a little overbought. So I can't rely on these guys, but I think the news media is making it to the point here where it needed today. It needed a counter trend smack to the upside just to get people thinking, hey, maybe they're wrong. So that's out the news. So my trend is that I've got sell mode in the daily of the Dow and the S&P. I've got a sell signal in the weekly charts, and I needed the cues to start to fail as I went through all those IBD stocks that were topping out the other day. But if you look at the chart and you're very critical, you can see that the weekly chart is still stuck in the middle of its range. In the weekly chart, it's on the 9-period moving average right now. So I'm going to just say to you, I would rather see you start to add. I don't think it's going to change anything. If anything, there could be a spike to the upside, and then that's going to filter out, and then we'll get the real market. To me, the real market right now is sideways to down, and that's what I'm going to say to you. So I would start small, and I would add. And if you miss a big move to the downside, you'll get plenty more. Look at it that way. Don't say, I've got to time it perfectly.
Perfect. No, that's great. That's exactly what I was thinking is go now, and then if there is a positive news item, that'd be another perfect opportunity to possibly add.
And then you just have a little patience, and as it rolls over, you can start adding. Yes.
Awesome.
So I hope that helps you, Ben. Thank you very much for calling. Good call. So let's go to Don in D.C. Don, how are you?
Fine, thank you. How about you, Basil?
I'm okay, but I'm not allowed. I've used up my time for politics, so let's talk stocks.
Okay. I'd like your opinion on SLV.
Yes.
I have quite a few shares of that, and I've been in the red in it. And I was wondering, what's your opinion, and what should I do?
Okay, let's do this right now. First of all, I'm going to ask you. You don't have to tell me if you don't want, but are you in it and you've been in for a while, or just recently you got in but now it's down about a point or less than a point? Or have you been in for a while?
I've been in it for a while. That's the problem.
Okay, so now I need two different things. This is why Technical Friday is such a great time to do something like this. When someone calls me, and I always talk about this for ages, what I do is I look at the stock and I say, what would I do right now if I was in it? And if I said to you right at this moment, Don, would you be buying the stock or would you be selling the stock? Right now.
To me?
Yes.
I would be selling right now.
Okay. And here you are, you're in a long position. So there's a conflict in your mind. It's not just a conflict in your mind, it's a conflict in your pocketbook, right?
Right.
Okay. So here's my recommendation. I had a couple of people ask me over the last week or so about the SLV and I think it's the triple short silver. Just for the life of me right now, I'm not remembering what the symbol is. But that's not the point. The point is that I looked at it, but I looked at it through the eyes of the SLV, which is the iShares Silver Trust, trading at 15.11. Down 6 cents, way below the 9-period exponential moving average of 15.27, having gapped down. And we know that very often with gaps to the downside, which occur frequently in the metals markets, anything that trades in Europe before we do, will see gaps, like Toyota Motors or something like that. However, this is a little different, because in the weekly chart, you've got a decisive arch formation, lowercase h, sharply down, rallies up, looks like a lowercase h, comes back down, tests the low from 1464, went to 1463, 1 penny lower than the left side low bar back in October, November. And then what does it do? It rallies again, but less. It can only go to a C minus, and it goes to 1696, and now it's coming back down in the weekly chart under the 9 EMA. I have to still consider that silver, especially the monthly chart, is looking like it needs very much to test the 1460s one more time. So for you, having been long, another 70 cents is unfortunate, but it's not the end of the world because you're already down. So now you're down a little bit more. That's not the issue. The issue is what happens if silver takes out 1464, goes to 1440, and my rule of thumb is that the bar that takes out the left side low in this arch or H formation has to that bar or the very next bar close above the left side low. That would be 1463 or 64, has to close above it, and then tackle the next icon on the upside, which would be the 9-period exponential moving average, in this case 1556, or the left side peak. That's way higher, so it'll have to be the moving average. So what I'm saying to you is it's very difficult right now for me to say, especially with the dollar holding well. It's not, you know, the dollar is not doing great, but it's holding very well. And I believe, oh no, the dollar has just made a leg C to the upside. So it's doing much better than it did right at the beginning of the show. I'm updated now, and it's leg C. And that suggests to me that yes, you could get an H formation in the dollar daily chart because you've already got one in the weekly, but the weekly one is starting to look like a successful test of the left side 93.13 low. That puts gold and silver in a vulnerable position if gold was to go higher. So I'm giving you this preamble because I need to do the analysis of the actual chart itself, and then I'm going to do two things. One is what I normally do is I look at the stock or whatever, the index, and I look at it as if, what would I do right now? That's always when people call, I say, okay, I'm going to treat it, no matter what you're in, I'm going to treat it as, would I buy it or would I sell it? Now what I'm looking at is a situation that says you're in a particular position, and I have to look at it as if I want to give you the kind of advice that says it's going to be okay. But on the other hand, the chart is saying it might be okay if there's a really successful test of 15 to 16, of 15 to 1460s, and then a big bounce like we've seen before. Even if it isn't as big as it was before, at least it'll get to the 1556, maybe $16, $16.30 area. So let me just ask you, your average price is what?
More than 20. More than 20.
Okay, so now you've been in it for quite a while. Actually, you've been in it for about a year.
Yeah, well, yes. Someone else bought it for us. More than a year. Was, but some financial advisor, but
okay,
got rid of him.
Okay, all right. I'm going to try to. You know what I'm going to do? I'm going to think about this over the weekend. The difference between selling it here, if you're going to sell it with a 5-point loss, it's a 25%. I don't know how much. Maybe it's a bigger proportion that you would even like to think about because someone else did it. I want to think this through, and I want to give you a scenario that says if it's a part of your portfolio and it's part of a bigger portfolio, and this turns out to be a big amount, but it's really a very small part of your portfolio, I want to talk to you about it in the sense of what would you do? Are there ways of making up, maybe not the full amount, because now it's going to go from 15 to 20. That's a 30% gain, 33% gain. That's big. I don't want to even make any promises at all. What I'd like to say to you is I'd like to give you a scenario. I have already thought it through. I've thought it through for myself, thought it through for others, but I want to go through it again. And that scenario says that we're in a deflationary period, which is one of the reasons why I think all these metals are pulling back. But I want to do an assessment that says in a week's time, when maybe we're through with the volatility that's added by the Greek situation, although the market says probably not, but let's just say it's going to continue to be there. At what point will gold, and then silver will piggyback, but at what point will gold become a currency of fear, and And will it happen in this particular 10-day period? Because that's going to be really important. Because what I'm looking at here is that I see some signs. I don't see it yet in the dollar, but I do see some signs that gold is attempting, some of the gold stocks, not gold per se, but some of the gold stocks. And let me just do this gold now. This is a big deal. Yes, and gold itself, I think they are all coming to a situation that says either this time we are smashing through support, that is gold and silver, or we're going to have another opportunity for a bounce. And that's the scenario that I would say to you, that's the one that you want to be dealing with. You want to be coming to it from you want the wind a little bit more at your back, saying that, you know what, there's a bounce, and that bounce could take your SLV at least to maybe the 16.5, maybe 1660 area, maybe even to retest the recent 1690s. That's a lot better scenario because you can recover. You see, I don't feel a 15% loss is something that it's hard to work with, but over a period of a year you can make it up if you're just a reasonable investor. But a 20% loss is really psychologically hard. Or more is very hard. But if you are looking at this and you say, you know what, I'm prepared to take a loss if I know that I can put the money somewhere else that has the potential to make up a little bit, and then at some point I can get back in with a clear mind to get back into SLV as a position play, which is really what you wanted originally, which hasn't worked out. I don't want to make this very confusing. So you know what I'm going to recommend? I'm going to say, hold on to the position that you have right now. Let me think it through. I'm going to talk. I'll think it through, and by Monday or Tuesday. Now, I hope the whole Greek thing doesn't make silver more vulnerable, or I hope there's a bounce. It gives us a little time. But the only thing I would say to you is, you know what you might want to do, and talk this through with the family, whatever you have to do. You might want to take at least a fifth, just some part of it off right now to say, you know what, I'm clearing up my head. That's money that's going to be accessible to me to do something else with, or nothing. But it's my money.
Yeah.
And that little bit that you take off just starts the process of saying, now I'm handling the trade. I'm not going to be a victim. I'm going to be I'm going to master my situation a little bit better, and then we can talk about it. But I would recommend just maybe it's at 15.11. If it takes out today's low of 50, if it goes under 15, I would just take off a little bit, even though it might be within 40 or 50 cents of having a really nice turn to the upside. It's your thinking. It's the fact that it's sitting on your head. I know it's sitting on your head. You got to get your mind back again, so that you've been in the market a long time, right?
Right. Okay. This is a small part of my portfolio, so it's.
Yeah, so that was my thinking. If it's a small part of your portfolio, it allows me a little bit of time to think it through in a little bit better way. And if it's a part of you, then you don't have to really do anything right now. But I know it's sitting on you and it's nagging, and you're saying to yourself, oh man, it's a waste of money seeing it go down like that. Could it go down much further? And my answer is if the 14s does not hold it in the next 3 weeks, it could go lower. And that's what I don't want you to be sitting with. So give me a little time. I'll think something through and give you some kind of more practical advice at this particular point.
Okay, you would let me know on Monday.
Yes, on Monday. And if you want to call, that's fine, but I will talk about it on Monday. But if I haven't, for any reason on Monday, call me Tuesday and we will discuss it. I've already thought it through, but I want to be much clearer. Okay?
Okay, I have RIG also.
Yeah. You have another question? All right, we'll look at RIG when we get back. I do want to look at RIG. Hold on, Don. We'll be right back.
Okay.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. Dow's up 88, S&P's up 1, and we are on with Don. We were looking at the SLV, that's the iShares, and we're still looking. Now he's looking at RIG. RIG is Transocean Limited. Do you have a position in this, Don?
Yeah, yes. Yes, I did. Well, for, I don't know, a little less than a year or so, less than that.
Same guy?
Same guy.
Yeah, I can see it's the same guy. So he got you in at the top, and, this is the guy we should know his name so that we can get him to know whether he's buying right now or shorting, because whatever he does, it's the opposite. So, all right, we all make mistakes, but let's just treat RIG as it stands right now. See, RIG is part of this whole commodity area that we're looking at. And I was looking at the TRCCI, which is the Reuters commodity index yesterday, and was showing that it is in a decisive down mode. So I'm going to make the recommendation that as far as RIG is concerned, At this particular point, it's almost the same thing, almost the same price. It's at 16.33. You got to see if it's going to test the low of 13.28. So, wow, how do we do this? Okay, you know what I'm going to suggest to you? You've held it this long. Now, sometimes when you hold the stock for a long time, you throw up your hands and you say, I'm just going to wait. And sometimes if you wait long enough, it comes back to a reasonable level. And sometimes it just keeps going down and down and down. You don't even want to look at it. You don't even open the drawer that has the certificate. But in this particular instance, I'm going to watch this closely. I'm going to recommend that it's almost the same as the silver trade, because I would not be buying it now. And if I did buy it, it would only be for a trade. It would be a trade of about 1.5 points to maybe get 10, 11%, and then I'd be probably getting out. But at this point, it's just got enough energy on the downside that says it could be ready for a little bit of a bounce. Now, a little bit of a bounce, I don't think is going to help you, but psychologically, it's going to be so much better when you get out by your decision on a rally than just grabbing the lows, recent lows. So how about, I say to you, I would not be buying rig. I wouldn't be adding to rig. I would like you to actually extricate yourself from rig, because the monthly chart and the weekly chart are really not very good. But if there are signs in the next 5 to 10 days that rig hasn't broken $15 to $14.60, but instead is trading towards $17.75, then I'm going to say to you, okay, now I can give you a much better plan that says you're going to take a loss, but not nearly as big a loss as it was if rig couldn't hold those support levels. But I don't, once again, suddenly want to, on one day, you just get out of everything when you're so close to at least the potential for a bounce. So how about we leave those? Let's look at them again on Tuesday. If you're able to, and you can call me on Tuesday, let's look at it on Tuesday. I'm going to think it through, because I want to look at other stocks in the oil field, the oil refinery, I think it is, area, and then I can give you at least some sense of what could happen if it holds the support, and that's really what you want to be looking at. Does that help you a little bit?
Yes, it does. Okay, what was the support for rig again? 15 to what? 14?
So, I don't want it to go all the way back down to the low of 13.28. It really has to hold in this, the candle of the 3rd of April with a low of 14.21. I'd prefer that it doesn't get down there. I would like it to hold the 1560s, somewhere there. 1560 was the level I think we looked at in the SLV, right?
Yes.
I think so, yes.
Okay.
No, that was 1460. Okay, one is 1560 for rig, 1460s is for the SLV. Call again. Thank you so much.
Okay, thank you, Basil. Have a good weekend.
Have a great weekend. Folks, hold tight. You've got programming coming up. We've got a Nick Owen page, and I check out my opening call. This weekend should be a really interesting weekend. I'll be sending charts out. And thank you for being here. Otherwise, I'll see you Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.